what is it that you're sensing in terms of demand as well as the inflationary pressures, and will that then continue to impact rural, and will it remain tepid, or are you seeing any green shoots there?
Yeah, first of all, but before I answer, first of all, good morning. And before I answer that, a couple of backdrop in terms of our performance. We are operating through a very high inflationary environment and challenging environment, I must say. We had an inflation of 8% at a group level, which was on a top of 11%, which means on a 2-year basis, it's 20% inflation, which definitely is impacting most of the categories we operate. People are cutting back on their discretionary spending. Rural is getting impacted also because the disposable incomes and the purchasing power parity of the consumers are getting impacted. However, even in that background, we reported 3.4% of revenue, which in constant currency is 5.7. But if you see it from a 3-year CAGR basis, it is 9%, which means over 3 years, our business has grown by 30%, and this is demonstrated both at a quarter level and at a YTD level, which means sustained business growth, and also coupled with increase in market shares across the product portfolio we operate in. So the fundamentals of the business remain strong. We are growing ahead of the categories or segments where we operate in. But coming back now to your specific question on how would the demand look, and especially the rural segment. Yes, rural segment has for us also this time lagged behind urban. We in fact marginally contracted by 8.8%, while rural grew by 7%, primarily driven by new age channels of modern trade and e-com. E-com remained a star performer with 39% in growth, so on. We think that rural has probably bottomed out. Things should start looking better from now. There are green shoots available as we speak and are visible clearly in certain hinterlands, and also coupled with the good, months with good budget, which clearly has enhanced the capital outflow to almost 10 lakh crore, and effective capital being 4.4% of GDP, which is really good. I think this will have a considerable multiplier impact, create job opportunities, put more income in the hands of consumers
Right.
at the hinterland. And therefore, I personally feel that rural has probably bottomed out, and it is only a matter of time, maybe a couple of quarters, but midterm to long term, we remain bullish on rural, uh, given the fact that the per capita consumption of most of the
Right.
segments we operate in is significantly below under indexed. So there is no reason. It's just that the short term pain will slightly
Sure.
continue for 1 or at best 4-5 months.
Ankush, very quickly then, as we begin winding up this interview session, your EBITDA margins have continued to be under pressure. When do you see this normalizing?
Yeah, see, the EBITDA margin, we also have to see that from a perspective that over 2 years, the inflation, combined inflation has been 20%. And it has also been impacted by currency devaluations in
We seem to have snapped that feed. We'll be reconnecting then with Ankush just to get more clarity. But in the meantime, just want to identify some of the other stocks that are in the spotlight in today's trading session. Adani Group stocks aside, then let's focus in on some of the other movers. And you've got something like an Aegis Logistics that's in the spotlight. Remember, came out with a pretty healthy set of numbers. Revenue growth was seen this quarter, and you've got the stock which is soaring about 6% plus as we speak. Gulf Oil Lubricants as well. It was a little bit flat in terms of their revenues, and profits came in at about 63 crores. Ankush, apologies for that. If you could just continue with your chain of thought.
Yeah, sure. Thanks. What I was saying is that inflation, we are almost 20% on 2-year basis, plus the currency devaluation in our major markets, which is clearly putting pressure on the margins, and this is visible across the industry. However, important to note is that sequentially, the contraction in margins is going down. At a group level, we had almost 350 bips of contraction in Q2, which has now come to 283. So there's an improvement. More importantly, in India, the contraction in Q2 was 390. It has actually halved to 190 bips, which means things are getting better. And Q4, in terms of margins, the contraction should be even lower. Although only word of caution that the pressures on inflation is now shifting more from vegetable oils or crude linked derivative products to more food linked products, and food still being 20% of our portfolio, and inflation in that will still be around 15 to 20%. So the abatement will continue at least for 1 or 2 quarters, meaning the contraction in margins will reduce. That I feel will give some space for us, along with our price increases, which have been judiciously and calibrated in a calibrated way taking. It should help us mitigate significant part of it, at least in next fiscal. Not in the immediate term, which is this quarter though, because this is high salience in foods. But we are hopeful that once the inflation plateaus, it is unsustainable now. Then the most of the saving initiatives which we have done, or most of the price increases or value efficiency measures which we have done so far, which would start kicking in to the full line PNL, going forward, and that should give us some relief. Plus, we would also be, accelerating our pace on certain projects like net revenue management, so that we unlock certain value, whether in trade margins or consumer promotions, and then we would definitely redeploy it back to fund our advertisement, mainline advertisement, to generate demand, because demand currently continues to be under pressure, and I think it definitely needs an oxygen or a definite boost to bring it back to near normals, because we feel that again, as I said, India remains a very low per capita consumption for most of the product portfolio we operate, and the headroom for growth is really high, whether in terms of market shares or in terms of the category penetration. And one more thing I would say, that though it is not related to inflation, but wherever we have operated, we have continued to gain our market shares, whether it's hair oils, very high competitive, oral care. We have become now number 2 player in the country in this quarter.
Right, Ankush, I'm afraid we're completely timed out. Would have loved to take this conversation forward, but I'm afraid we'll have to call it a day then. Thank you so much, though, for joining in and sharing your thoughts.